Hey, thanks, Scott. We've got the former Treasury Secretary here, Steven Mnuchin, of course, the founder and managing partner of Liberty Strategic Capital as well. It's nice to see you, sir. We got a lot of former Treasury Secretaries. Hank Paulson's here, Tim Geithner's here, Larry Summers is here, you're here, Bob Rubin, Janet Yellen. Who am I missing?
It's a big turnout.
Here's what I want to talk about, tariffs. We talked to the President of the United States this morning on tariffs, on these investments that are being made by our trading partners into the United States. When we heard from you, I think this was back in April, you said you thought 10% tariffs would be okay. The markets would tolerate that. We're not anywhere close to that right now. What do you think is baked into the way the markets are actually thinking about tariffs today?
Well, first of all, it's great to be here with you and a terrific turnout. You know, the president has two objectives. One is to rebalance the trading relationships and to make them more equal. And that's something I completely support. That's something I was very involved in with the first term in both China and USMCA. And the second is he fundamentally believes in tariffs for creating revenues. I think if you did a 10% baseline tariff across the board, you'd raise a lot of revenue. If you could score it, you know, I think people think that's in excess of $2 trillion over a long period of time. And that would have a meaningful impact on the budget deficit. I think right now you see he has tariffs somewhere between 15 and 30%. I'm glad to see the EU is done at 15. I'm glad to see he has Japan. Looks like they're making progress on China. So I think the market is slowly adjusting to what will be a higher baseline tariff across the board.
Slowly adjusting. The market has not really moved. In fact, it's just continued to move higher for the most part. And so the question is, do you believe the market fundamentally believes that these tariffs are here to stay? Well, look, at these kind of levels.
There was a big correction in the market after Liberation Day, which were much, much higher levels and quite concerning across the board. And there was some question as to whether they were going to be to negotiate or not. Right now, the market is looking at some certainty and some uncertainty. Clearly, the market's driven right now by a lot of AI spending, a lot of CapEx in technology. This is all very, very good things for the U.S. economy. On trade, I think it's going to take time to see how these tariffs have an impact, and different businesses will be impacted accordingly. So some will be winners and some will be losers.
Do you think these negotiations are still open for negotiation? And what I mean by that is even deals that have been reached with the EU, for example, or Japan or the like, that he could go back to the well and say, actually, I need you to do X, Y, Z in the future, and if you don't, we're going higher. Or I need you to do X, Y, Z in the future, and it will go lower.
Well, I think the first thing that the market is looking for is actually an outline of what the specifics of the deals are, since clearly tariffs are only one component of it. Non-trade barriers are another very large component in making this more equal in terms of trading, and then investment into the U.S. So I think we're all actually looking forward to the documentation. But I think, look, President Trump is a negotiator, and he's made it very clear.
Do you think there are teeth in these deals, though? And we asked the president this morning, because I was going to say, under his last term in that office, there were some investments that were announced by China into the U.S., but ultimately they didn't come to pass. And I just wonder how much teeth, whatever these commitments are, how committed they really are.
Well, I think, the China phase one trade deal, it was a very large deal, very important, negotiated over a long period of time and lots of different chapters. Unfortunately, what happened is once we got into COVID, China didn't adhere to the deal, and then the Biden administration didn't enforce the deal. So I think one of the important parts of the China negotiation is to make sure that China lives up to the commitments they made in the phase one deal.
Do you think that he should give out some of this tariff money as dividends to either lower income or middle income people, or would you prefer to go to the debt?
I'd like to see it as deficit reduction. I think, many of us are concerned about the size of the deficit, and there's really only two ways of dealing with that. One is growing the economy, right, and two is creating more revenues. So, no, we should be using the tariff revenue for deficit reduction.
And finally, the president talked about Kevin Warsh and Kevin Hassett as potential Fed chairs, the two Kevins. Which Kevin would you prefer?
I think there's a lot of good candidates. The president mentioned there's two other people who he hasn't announced, and I'm sure he'll make a great choice.
You're still a politician. Thank you, Mr. Secretary. Appreciate it.
Thank you.
Thank you. Great to see you.